Welcome everyone to the quarterly meeting, and I'm very thrilled to announce the segment that we're going to have now with Jigar Shaw. He's an acquaintance and friend that we've known at Apex for some time, and he's been one of the huge leaders in the renewable space. And why don't I just let Jigar just take a couple minutes to talk about his background, and then we can launch into the discussion here for our quarterly.
Thanks, Mark. Yeah, I've been a big fan of Apex and the work you guys have been doing for years. Yeah, I think most people know me from founding Sun Edison in 2003. And then before that, I worked at BP and actually started my renewable energy career in 1995 as an intern at Astropower. So been at this for a long time. I then, joined the nonprofit ranks with Richard Branson in 2009, learning about all sorts of these solutions that aren't just solar. And then, most recently co-founded Generate Capital and now serve as its president in 2014.
And obviously, I've followed that career closely, and one of the things that I've promoted and been a big fan since very early days is the Energy Gang, and just a very timely podcast about our sector. And there's times when it is so on point that I'll just promote it on my social and send it out to the team. So great work there on the Energy Gang.
Thanks. Yeah, it's a labor of love.
Well, I'll launch into it, Jigar. One of the things that we have been talking about a lot more recently is how the renewable energy sector has, it has become, kind of a sophisticated execution-based, very financiable part of the energy world. I wanted to get your take on, where solar is today versus when you were, first getting into solar back in the early days in the kind of pre-2000 year, and how you view it today and the future, just from a big picture perspective.
Yeah, it's one of those things where I'd say that when I first started in solar in 1995 and then Sun Edison in 2003, there was a real David and Goliath feel to it where we were David. I think what's funny about solar today is that we're now Goliath, right? We actually have more megawatts going in for wind and solar than any other type of technology, and have so since 2015. But we still have the values of David. And so when you think about the people who are part of our industry, they all remember what it felt like to have, to want to be kind to all around, to want to make sure that we were an inclusive industry, that we wanted to figure out how the local community participates. We wanted to figure out how everyone else participates. And it's a true joy to watch this phase, right? Where the people that are part of this industry are not just craven capitalists, although that is a segment of our population, but they actually are distinctly aware of the sacrifices that it took to get here, and they're not immediately assuming the worst characteristics of the industry that they replaced.
I think that's a great background. I remember when I first got into wind energy, we thought we had won the greatest victory in the world when we were interconnecting a 75 megawatt project on a low voltage system, and we've come so far, and now we're doing 2, 3, 4, 500 megawatt projects, and we are figuring out how to get the economies of scale and do huge generating projects, at least on the utility side. And one of the things that I've been talking to you and some of your companies that you're very familiar with is on the hydrogen side of things. And we have always strived for making wind and solar more financeable, but it's always, we have a shortage of people to sell our product to when there's not as much transmission, or there's not enough policy in particular states. And hydrogen to me seems like it's been one of those things. Talk about like where hydrogen is today, and what do you think is the future in that like technology and sector of our business?
No, it's a great question. In general, I'd say that just to step back for a second, one of the things that people have really thought through about wind and solar is this whole concept of seasonal storage, right? That when HVAC loads are down, we produce a lot of excess power that the grid doesn't necessarily need. And after we're done pushing out as much coal and natural gas from the grid as we can, there's still sometimes power left over. And I think a lot of folks think about this as returning that power back into the grid. So we're storing it as compressed air or pumped hydro or however you want to call it. What hydrogen affords you to do is actually to take those electrons and take them out of the grid, right? And so once you create the hydrogen molecule, you now have the ability to create fertilizer, you have the ability to create chemicals, you have the ability to promote clean transportation. There's lots of other things that you can do with those molecules, but I don't intend, unless it becomes cost effective to do so, to return those molecules back into the electricity system. Instead, I intend for those molecules to decarbonize other parts of our economy. And the thing about hydrogen, which is so unique, is that it's already a $130 billion a year business. And so there are already very large companies like Linde and Air Products and others who actually handle hydrogen on a regular basis. So whether it's hydrogen storage tanks or compressed hydrogen, or whether it's refueling stations, much of that technology has already been created and is mature, as well as the electrolyzers. And so it's really not at scale, but it is mature. So the safety protocols and other pieces are already there, which is, I think, really sets it apart from some of the other seasonal storage solutions.
Where do you think, what is going to unlock, the type of projects like the one that we're talking to Plug Power about, where we're potentially going to be working on a collaboration, or we are working on a collaboration with Plug, where we have we're providing clean wind energy to an electrolyzer, and that electrolyzer is servicing the green hydrogen that's needed for like various things, including their their warehouse efforts. What do you think is like going to be the key to unlocking massive amounts of projects? Is it the cost of the electrolyzer? Is it policy? I mean, you and I both come from the project finance world, and project finance is the thing that will like just make this like just completely grow enormous.
Yeah.
What are your thoughts?
No, I totally agree with you. I think that when you think about a project finance framework, right, you want to, at the core, make sure the technology works. And so we're not taking technology risk. I think we've already checked that box. Electrolyzers are very mature. And then you've got input, right, which is what you're talking about in terms of clean wind energy, et cetera. And then you have operators, which I think we are finding there are people who can operate these facilities. The part that's missing is offtake. Right. And I think where Plug is differentiated is it's using 27 tons of hydrogen a day today, and it's moving to 85 tons of hydrogen a day in the next few years. Now, these are tiny amounts of hydrogen, but very large amounts of hydrogen for you and I. Right. And so for us, creating a 10-ton per day hydrogen facility is actually quite a large facility, probably $100-200 million of capital, and can be co-located at one of our sort of wind farms or whatnot. I think that over time, just like solar or wind or other technologies, there are many applications for hydrogen where the end customer pays a landed cost, which is a lot higher than the production costs at an oil refinery. Like an oil refinery, you produce hydrogen for roughly $1.50 to $2 a kilogram. Plug Power on average, it pays $6 a kilogram. And some of the universities and others that use hydrogen pay a landed cost of $10 a kilogram. And so you would slowly start to aggregate up all of these landed costs, and then figure out where you can regionally produce hydrogen at a lower cost than those landed costs, so that you can expand the market, right? And I think that know-how and that expertise is something that we've done for years in the wind and solar spaces. Really figure out how we get bankable offtake agreements.
I couldn't agree more. Well, we're excited about, where things are going with hydrogen. As you say, it is already a huge industry, and I really do agree with you that we use the hydrogen molecule in, the various industries that there are already a huge demand for. So I think that's where we have such a great opportunity, and we're thrilled to hopefully have new customers, new offtake in the green hydrogen world. Want to change the subject a little bit with you. One of the areas where Apex has tried to be a leader and has led is on the corporate procurement side of things. And I wanted to get your take on how that fits into kind of short-term, medium-term policy and energy transition. Do you have like thoughts on like continuing this and how it expands and becomes like kind of more a higher quality part of energy transition?
No, it's a good question. I think that the corporate PPA broadly is a real game changer because what it does is it brings another stakeholder to the table and brings them in a way that is really very sticky, right? You can imagine these contracts for differences that a lot of these corporate PPAs are signing makes them really a stakeholder at the table for how markets operate, right? And so their contracts will be underwater or above water, depending on how battery storage gets rolled out. It'll be above market or below market, depending on how market rules are set, right? And whether demand response and load control can play a role, right? And so all of these really thorny issues, right? I mean, we're still operating under market rules that were largely written by Enron in the late 90s, early 2000s. And so as we come up with new market rules, I think the corporate PPA counterparties, Microsoft, Apple, et cetera, will now have a much louder voice. And I think will be big allies to the clean energy industry as, to how we actually create the wholesale market rules, et cetera, for a decarbonized space. The other spillover effect, frankly, is that now that the wind and solar industries have gotten the corporate PPA signers to do this, they're now looking to do this in other parts of their business, right? So you're starting to see really bold offers from Amazon, et cetera, around vehicle fleets and figuring out how to be the physical offtake for vehicle fleets. And the same thing's true for HVAC, green refrigerants, right? And so I think the wind and solar industries can be quite proud of the fact that inventing this model is now helping decarbonization efforts in other parts of their business.
I couldn't agree more. It is pretty exciting times. And I think like a lot of these corporations have their heads in the right place. And these contracts are, I think, just the starting point. Do you see any kind of, like maybe more complexity in those types of procurement where it's a combination of utility and DER and like, demand response with corporations? Or are you already like, getting experience in that more complete model?
Yeah, it goes back to your project finance comment, right? Is that the technology exists today to be able to respond to a signal, right? So you control a bunch of loads that are at the customer location, and you have a technology platform that aggregates those up across different points of the grid. And the question now becomes like, who is going to pay them to use that service, right? And you can imagine a lot of these corporate PPA owners paying them to use that service and saying it would be nice for these customers to use more power during these times of the day and use less power at these times of the day. And as long as it doesn't adversely impact the customers because their houses are energy efficient and it doesn't matter when their air conditioner runs there, as long as the house remains within a certain tight window in terms of temperature in the house, or when water heater is heated or whatnot, right? You could imagine creating load profiles that are more valuable from a risk management standpoint, and those corporate PPA owners are willing to pay for that risk insurance to the folks who own DERs. And so I think that the software already works. It's really more about the offtake. And for a long time, people in the DER space have been waiting for the utilities to be the offtake. But if those guys are slow, as they've proven to be in the past, then you could imagine these corporate PPA owners in the wind and solar developers who support them becoming the offtake instead.
I totally think you're right. I think, one of the things that we're obviously doing a lot of corporate procurement, corporate PPAs, and we're trying to position ourselves to be able to take the next step through, operating projects and understanding, what the data says about when they're generating, and then like trying to backfill on the demand of these corporates, and then coming up with products that involve DER and storage to like have a more quality product. So I think it's going to go there pretty quickly, and agree with you. That's an area where there's, leadership is needed. A couple more questions for you, Jigar. One of the slides that we have in our like kind of corporate, introduction deck on Apex, a recent slide shows the market capitalization of some of the fossil fuel companies and their change in the last year. For instance, Shell and Exxon, it's not a great story. And then you look at some of the companies that are on the energy transition side, if it's NextEra or Ørsted or Tesla, and in that same time period, their market capitalization is going up. I wanted to like put that as like kind of a backdrop for where do you see carbon policy and trying to get past the incumbency of the fossil fuel companies to break loose so that we are building out the amount of new carbon-free resources to tackle climate change. Paint a picture, if you will, on with that background that like can give kind of motivation to like my team and to like the rest of the industry. How does that come about?
Well, I think what we have under our control is a lot of this clean electricity standard work at the state level, right? So you now have 15 plus states that have signed on to this 100% clean energy by X date, 2040, 2045, 2050. And that's what we have under our control. I think in the EU, you have a lot of, of the COVID stimulus money that is tied to good policy at the country level for each of the countries in the EU. So I think you have a tremendous amount of policy happening there. I think at the federal government level in the United States, it's largely been a sugar is more appealing than vinegar approach, right? And so figuring out how to provide tax credits or other support mechanisms to the good stuff without taxing the bad stuff has been the political formula that's worked in the past. One of the big proposals that I'm pushing is called clean tax cuts. And what that is basically as the solar ITC and the wind PTC starts to phase down, replacing them with giving access to municipal bond financing, basically tax exempt financing to the wind and solar space. And that would, as you know, structurally reduce the interest rate costs for our debt by a third. Which I think is a pretty big deal. And so I think you're going to continue to see more of this promotion and sugar approaches. And it's just really hard to see people moving towards a carbon tax or some sort of policy that penalizes carbon intensive industries. It's politically seems very difficult at the federal level.
One last question. Wanted to get your take on storage. We've like been, working on from a development stage, like hybrid projects, solar and storage and standalone storage, mostly at a utility scale. Wanted to see where you thought, the problem is that, depending on what RTO, ISO you're in, it's like from a project finance perspective, you're looking at where are those revenues coming from long-term that investors are looking for, but wanted to see where you think it takes off the most and at what scale and execution do you think storage is going to be really ramping up the most?
It's a good question, and frankly, it's the crystal ball is a bit murky on this. I think on the macro side, it is very obvious that the electricity supply chain is the longest and largest supply chain in the world that doesn't feature storage, right? In the transportation fuel space, you have storage. In the agriculture space, you have storage. Most supply chains that are long have storage built in. But our industry prides itself in making sure that supply and demand equal each other in very specific ways every millisecond of the day. And it doesn't make a lot of sense because it actually is, far too difficult to do that versus having storage built in. On the other hand, I think the way in which storage has been subsidized and facilitated seems unworkable to me long term. So my sense is there's a right amount of storage for every solar and wind farm to feature for their own selfish points of view, right? I mean, like wind and solar farms want to be able to store power when prices are negative and, release that power when prices are positive, right? And so there's a selfish amount of storage that should be featured just because the projects make sense. There's a little bit more than that the system can incentivize people to do. But when you think about the sheer amount of wind and solar that's being added to the grid every single year, if each one of those systems featured an hour worth of battery storage, you could imagine that very quickly you could have plenty of storage for the entire system to utilize, and for wind and solar players to get paid to utilize in ways that make the system far more cost effective and far more resilient, right? So my sense is the days of there being specific battery storage subsidies for each system will start to go down. But I think that solar and wind farms actually will find it in their business interests to want to be able to shift power for 1 to 4 hours just because it allows the hedges that wind and solar farms put in place with insurance companies to be a lot cheaper.
Well, I think it also is like hydrogen is a means for, there is so much resource like in this country for solar and wind, and storage will enable us to use the execution capabilities and the low cost product that we can deliver to do more of it. Jigar, I thank you so much for your time. I want to commend you for your leadership in the industry, for being a champion, a sure-footed champion of energy transition, and continued success with Generate Capital and the great podcast of the Energy Game, which I like, definitely a weekly fan of. So I don't know if you had any other topics that you wanted to cover, but I think this has been a fantastic discussion and really helpful and motivational to our team.
No, this is great. And I'm just really thankful that you guys are proving every day that our best days are ahead of us, and just really want to thank you and your team for all the leadership it's shown over the years.
All right. Thanks so much, Jigar.
Thank you.